All right, everyone, welcome back to 7-Minute Options. Today, I want to talk a little bit more about expectations and what realistic expectations are, not just in options, but I guess in the stock market. I'm always annoyed and a little bit amused by some of the claims out there on the internet. You can always, as soon as you start searching for anything options or investing related, I guarantee you, you're gonna come across YouTube ads about individuals who have they claim they have a secret scanner and they can beat the market 99% of the time and they can double your money in a year, or they can take your $10,000 investment and you'll become a millionaire in 3 years just like they did, and that kind of nonsense. And I think there's also the Reddit crowd, right? The Wall Street Bets crowd, where they celebrate people who sell their pickup trucks and YOLO everything on some crazy out of the money call, which 99% of the time doesn't work out, but the 1% of the time that it does, that's the guy, that's the story you see, and that's the one that's celebrated. So the realistic expectation should be 8 to 12% for most investments like stocks and mutual funds and ETFs, etc. And with options, my personal goal is 20% a year. And my biggest challenge is not getting 20% a year, it's getting 20% a year consistently. I think that's what I'm still learning to master, is consistency, right? Consistency in the mechanics, in the trades, in the strategies. So if we look at this chart, right? This chart is Berkshire Hathaway. This is Warren Buffett. He's the gold standard, right? Considered by many to be one of the greatest investors of all time. If you have a 264% gain in 10 years, all right, that works out to roughly, in this case, 13.79%, right? Let's say 14%. So there you go. Warren Buffett is averaging 14% a year over the last 10 years in Berkshire Hathaway. All right, we can look at the SPY. You get very similar numbers. You get, doing this quickly, you get 3.14, all right? So the S&P 500 over the last 10 years, averaging 12%. And you can see this here, the slope here is a little bit more gentle than up here. So over the last 2 years, that return has been actually greater. Even with the COVID crash, over the last 2 years, the S&P 500 has been on fire. Those are actually very good returns for the market for the past 10 years. The market historically has been between 8 and 12% long term. And so for the last 10 years to be going up like this, even with the COVID crash, it's been a good 10 years, right? So we got Warren Buffett at 13.8. We got the SPY just above 12%. What about the Dow Jones? Let's take a look at the Dow Jones. How have they done over the past 10 years? Ooh, okay. Yep, not as good as the SPY, but still pretty good overall. All right, let's see what that looks like. So we got 2.76 to the power of 0.1. There you go, 10%, right? So even the Dow Jones, all right, is doing 10.68%. Let's say 10.7%, right? Over 10% on the Dow. Fantastic. And if you look at, let's say in this case, I pulled up Morningstar, right? What are some of the best mutual funds? How are they doing? And yeah, so here you have a list of the 4- and 5-star rated funds from Morningstar, right? And they got, for example, 10-year return, 17%, 17%, 9%, 17, 17, 12. What you notice is that there's not a single mutual fund here that can average 20% long term, right? They're all between 10 and 17. And just to go back to what we were saying earlier, is that the last 10 years have been better than usual. Almost in every single one of these cases, the last 10-year performance has been better than the performance since the fund started. So for example, this one here, the top rated right now, 17% 10-year return, but averaging only 12% since since it was founded in 1985, right? 17% last 10 years, 12%, 9% last 10 years, 9% since it started, et cetera, et cetera. So yeah, some of these funds had a really good year, 74% in 2020, 38% in 2020. These are astronomical returns, but that was just because 2020 was a crazy year. If you look at the 10-year return or even longer, you can't get above 20%. I recommend that you guys start watching Tastyworks and Rising Stars, right? They profile average people like you and I who just started trading options one day. It took them a year or 2 or 3 to figure it out. And many of them are getting consistently above 20%, like 20%, 25%. Many of them can get like a phenomenal return 1 year. Anybody can get a phenomenal return in 1 year. Consistency is the key. But a lot of these individuals have figured out how to trade hundreds of times a year, thousands of times a year, and eke out an annual growth rate on their portfolios of like 20%. The Option Alpha podcast, again, Kirk Duplessis, another one. He profiled, listen to this one here, episode 61, Cameron Skinner. Cameron Skinner is a very famous investor. He was also profiled on Bigger Pockets. He's a very successful real estate investor, and he's also an options trader. Like, he trades himself. He was featured on Option Alpha, and he goes into details on how he earns 22% a year. And again, he's been doing it consistently for many years, right? Which is why anybody can learn this, and you can get better returns than the market, much better returns than the market. If you can get 20%, I think that is a realistic goal. You stick with this for 2, 3, 4 years. You learn all the ins and outs. You learn all the mechanics, and 20% is a realistic goal. And if you can consistently get 20% returns, your life is going to end up in a very good place 10, 20 years down the road. That's my personal goal. That should be your personal goal as well. Don't chase crazy returns. Don't chase the pie in the sky promises. 20% should be your goal. It's achievable. Again, check out Tastyworks, check out Option Alpha. People are doing it. It's possible. You can do it too. All right. See you next time.